What's going on, guys? Let's talk about a Bitcoin pullback. Is it in the cards? When will we know? You never want to be that guy that tries to, call the top and you front run it, especially when Bitcoin's trending really hard. But we've been trending really hard, so we're going to talk about that today. And if we are to get a pullback, what might it look like? Now, I've got a couple levels up on the chart already. You'll notice it is the quarterly level we've been speaking about at 58,822. We did front run it a little bit at 58,590. So that is to be expected. This is kind of a region of resistance, if you recall, because we were looking at the global point of control also coming in at about 56,200, if I remember. Yeah, right here, which was a big level here. And then we had our May and Q2 NPOC coming in at 57,844 perfectly. And then just above that, the quarterly. So if you notice, the May NPOC or the Q2 NPOC or however you want to look at it is showing you that this is the high here and that we have swept the highs and then come back down. So closing beneath this on a daily level here would start to look like a swing failure pattern of the highs, and it would justify the shorts that I began putting on a little bit more. In terms of the overall move, I've shared this with a couple different groups, looking for something like this where we came up to the 3-month here and then down to this key level as a shark. That does look like this on paper. Now, this can still squeeze higher, and these moves aren't really guaranteed. So you have to take it step by step. What you're going to be wanting to see is, one, that daily closure beneath that $57,844 level, that prior high here of the A of the structure, should this be a valid structure, right? From there, you should be challenging into 56,200 and looking at that level as a level that needs to hold if you're bullish. But if it is lost, that would give you confirmation that we're probably going to come back down and challenge these lows potentially. And if we lose them, we can look for the expansion of the 1618 of the shark, lining up with an 886 up to a 113% retrace for the D. And that would actually be the range lows of our prior consolidation, if you recall. Comes down into our key level, which is based on math. Again, these have an 87% strike rate, over 100 iterations of them as well. So it's been back tested. But also the value area low, a nice cleansing of the palette, so to speak, in terms of longs, as this has been a really aggressive move up. And I should note, anytime you guys get aggressive moves to the upside or the downside, you often get shark patterns. And the reason you do is when you come up here, what happens in a shark? Well, you get that one more extra high or that one more extra low. It gets people either extra bullish or extra bearish. It's a very aggressive move. And then what do you get? An extremely aggressive move off the lows or off the highs into deep expansions, whether it's to the upside or downside, typically an 886 up to 113% expansion. So that's what the shark really represents, and why it's so important for trending price action. We'll go on to part 2 on TikTok here. And if you're on YouTube, it is straight through. So part 2 here, we're going to look at the ranges. If Bitcoin pulls back here, what are the ranges that we need to know? We obviously have our overall range lining up with our key level. So I'm going to go ahead and get rid of that real quick. And we're going to focus on some time-based ranges and just keep on our key levels here, which is, again, that 57,844, 58,822, and then the global point of control here at 56,200. After that, I mean, it's a fairly quick move down. 53K is important. Then you've got 51.9, which is a weekly level, and then you've got your key level here at the low of the range. Now, if we take a look at our weekly ranges as of today, you will notice that, well, our value area low is coming in fairly close to 56.2. So should we come down into this region, right, between 56.2 and I would say 55,753. This is going to be your value area low of your weekly range that's developing. If we turn on last week, we'll see if there's anything that, matches up with this. Yeah, you'll notice that losing the EQ of your current range is also the value area high of your old range. So should we get a bounce down in this region, guys, you would want to see about 56,800 or so reclaimed. If you saw something like this, you'd probably be making your way down into the point of control at 55,000 and then looking at the EQ of last month at 54,000 where we were kind of settling at before, which again is just challenging the lows of the move down. Losing that would not look good, mainly because from there you're just shifting your focus. You're taking it level by level because there are no guarantees that you get something quite like this, all the way around, because one, it's a complete rotation of last week's range. But if we pull up our monthly range as well and just see if there's any confluence on the current monthly range, you will see that, yeah, I mean, there is. It brings us all the way back down into the region of our monthly value area low. And this is really a must hold level for me. That's assuming we even get there, guys. We're so far away from that. We have to understand that we haven't actually broken anything yet. We really want to see the loss of 56.2, in my opinion. You lose this level and it gets confirmed as resistance, then this is probably a pretty good indication we're going to start trying to challenge lower levels, in my opinion. But, you know, if we get there, we get there. If we don't, we just trade the chart for what it is. I am in an intraday short, so I am watching price action fairly closely. Now, again, when I say intraday short, you have to compartmentalize that I'm in a short in some of my day trading accounts, but my swing accounts are largely long from the lows here, guys, and I've just been taking profit slowly, to be honest with you, because should we resolve this range to the upside, well, you know, I want to still have quite a bit of Bitcoin. So even when I exit my shorts in some of my day trading accounts, when I take them, I'm actually in inverse perpetual, so I stay in Bitcoin all the time at those instances. So I'm not missing out if we go to the upside. But yeah, that's how I'm looking at the market, guys. Those are the key levels I'm watching. Hopefully this made sense to you guys. I want to keep them short and sweet, and I'll catch you in the next video.